Good evening, everyone. Welcome to this webinar, which is the book launch of the first book in our Trends and Perspectives International Politics series, edited by Yai and published by Routledge. This evening, we will kind of discuss about it with a very distinguished panel. Natalie Tocci, as director, will introduce it. And then Nicola Bilotta, the author of the book, and Maria De Mersis, who is leader at ESM, Pier Carlo Padoan, who is chairman of the board of directors of UniCredit, as well as vice presidents at Yai, will conclude. For everyone to know, we will record this webinar so that it will be available then in Yai's website for everyone who wants to have another look. But without any further ado, I would just kind of give the floor to Natalie Tocci, the director of Yai, for an introduction.
Thank you very much, Leo, and a very warm welcome on behalf of the Institute. Let me just say that I'm particularly delighted about the seminar, which really launches, on the one hand, this wonderful book, The Geoeconomics of Money in the Digital Age, but it also launches our series, our book series with Routledge, Trends and Perspectives in International Politics, edited by Leo Goretti. And in general, what the series really tries to do is that of reflecting, on the one hand, the main debates, both in thematic and in geographic terms, in international politics. But it tries to do so, and it is not a coincidence that it's obviously the series edited by Leo and Yai. It tries to do this by bringing together both academic and practice perspectives. I'm particularly delighted that we have Nicola's book as our very first book in this series, which on the one hand, I think reflects, and we're going to have now the opportunity to discuss its themes, but it reflects one of the main areas of interest in international politics these days, especially as sort of economics has become increasingly geopolitical over time. And this has been, I think, a trend over the last years. And I'm sure both Pier Carlo and Maria will speak at length about this, but also in particular finance and in particular money has become an increasing element of the geopoliticization of the economy, as well as, on the other hand, digital and the digital transition. And so what Nicola's book tries to do is really bring these elements together and bring them together, both, as I said, looking at it through an academic lens and with the rigor that comes with academic analysis, but also drawing from it policy conclusions. So I couldn't think of a best example to launch this series. Let me also say that I'm particularly happy that although this book series is obviously open to authors from all over the place, but I'm particularly delighted that Nicola is our first author in this book. Nicola, who is currently working at the European University Institute, but had actually been for a long time researcher here at Yai, and he's therefore an old friend of the Institute. And I often say, once Yai, always Yai. It is not something that you can get rid of very easily. In fact, Pier Carlo here, who obviously having done all sorts of amazing things, having been Minister of the Economy, now President of UniCredit, and a lot more, actually had started his own career back in the early days as a researcher in our institute, simply as testimony, both of the fact that obviously you end up doing great things after you leave the institute, but also that you retain a very strong connection to it. So as I said, absolutely delighted that Nicola, who we'll now hear from, is our first author of this series. And as I said, very happy to be launching this series with you. Leo, back to you.
Thank you, Natalie. And I totally agree with you. I think that Nicola's book really captures the spirit of this series, which is being a bridge between the world of research, of solid research, policy research, academic research, but also having an eye, keeping like under control what actually has to be done in the policy realm. So trying to draw some implications from the policy discussion and trying then to come up with ideas for the policy and decision makers. So, and I guess Nicola's book really kind of does so in an excellent way. It is really at the intersection between kind of monitoring economic trends, looking at kind of geopolitical dynamics and how they affect the monetary system, and also taking into account the impact of the digitalization process of technological change. Obviously, as Natalie was saying, Nicola was a colleague at IAI, is still kind of our kind of associate, but he's also the coordinator of the EU Supervisory Digital Finance Academy and senior research associate at the Florence School of Banking and Finance at the European University Institute, and as well an associate fellow at IAI, as mentioned. Now we will start the discussion with Nicola and Maria. We will kind of have different kind of rounds of comments and inputs from them. If you have any sort of questions or comments, you can type them in the chat box and we will try to collect them and possibly relay them over to Nicola and Maria. The first question that I would like to ask to Nicola is about the overall story of the book, right? Even though this is a policy and to an extent an academic book, there is a story behind it, as in all books. So what is the story then that you were trying to tell us with this book? And why is this story so relevant today, also taking into account the recent developments, especially I'm thinking about the US, so the incoming Trump administration. We know that Donald Trump has very specific views, for example, on what you call as central bank digital currencies in the book, cryptocurrencies, and so on. So why is this book relevant today? Over to you, Nicola.
No, first of all, thank you, Natalie. Thank you, Louis, for the kind words. Indeed, once you need to stick, right? And it's always my pleasure to still work with the colleagues from IAI. And indeed, this book is actually the result of our research, interest, and work that we have done at IAI since 2017 with some colleagues like Simone Romano, Franco Pastacantando, Fabrizio Botti. We explored different dimensions of this topic. So this book is actually the result of also work done with many colleagues. And indeed, why this book is relevant? You're right. The Trump administration is going to be interesting in the domain of financial cooperation and collaboration. If you see, there was a nice tweet by Trump. You know, many of the policy ideas of Trump are communicated through tweets, right? And a few days ago, he tweeted that if the BRICS will ever launch a new payment system or a currency, it will apply 100% of tariffs on any export from those countries. And that was actually following the publication of a document published by the BRICS under the Russian chairmanship, where they were analyzing the flows of the current international monetary system, suggesting new ways how the international monetary system could change. Look, this is nothing new. We already know that the dominant role of the US dollar international system has created discontent historically. From a geopolitical standpoint, we know that the US can leverage the US dollar and the underlying system of the US dollar as a foreign policy tool. We have seen an increase by 933% of US sanctions in the past 24 years. We know that it's not only countries like China, Iran, which are of course concerned about their dependency on the US dollar and US system, that are not happy about the current system. We have seen globally a growing small-scale experiment of other countries like Indonesia, like Saudi Arabia, trying to find new ways to diversify from the US dollar. But there is also the economics of it, right? Because anyway, we know that there are spillover effects coming from US monetary policy. So the book tries to connect the current literature on the international monetary, what is an international currency, because sometimes I think the debate is a bit sensationalistic, right? You read many articles, many reports that are envisioning some drastic change, but we need to go back to the basic to understand why the US dollar is the international currency, why it's not easy to actually diversify from the US dollar. And the book tried to analyze this reason behind the role of the US dollar and try to understand why also countries like the BRICS, like China, like the US, like the European Union are trying to shape or not changes in the international monetary system.
Yeah, thank you, Nicola. And this kind of gives us the opportunity to ask Maria something more about this kind of US dollar dominated international monetary system. So what is then the state of the art with it? What is the situation, and how has the role of the US dollar evolved recently, if it has in any ways? So.
All right, great. Thank you very much, Leo, and thank you. First of all, thank you for inviting me to read this book and to comment on it. And I should really first start by congratulating the efforts, in particularly Nicola, who has produced it. I think this is a very topical book, and it is, as you said in your introductory remarks, Natalie, it is very much at the cusp between an academic book, but one that is extremely topical. And in fact, what's really impressive about the book is how well it manages to be thorough, as well as very kind of on the edge of what is currently being discussed. And, you know, the book is not trying to predict what will come, but and therefore there may be a different direction of travel. But I think it makes a very good attempt to discuss the issues as they are now and see what kind of problems we have ahead of us. And with that, I come to the question, the international financial system and the weaponization of the financial system through its dependence on the dollar. So let's understand, first of all, what we mean by dependence before we can say anything else, and why we have this dependence. So if you look around, about 80% of all financial flows globally, and by financial flows we mean primarily trade. So if people across the world trade with themselves, not necessarily with the US, but between them, and any capital flows are done with dollars. And that's what I mean by dependence. So 80% of that is done by dollars, and the remainder 20% is done, second the euro, then everything else after that, right? So that's one. You can see that the whole world depends on the dollar still for actually carrying out basic financial transactions from trade to capital flows. So that's point number one. Point number two is that central banks across the world have what we call reserves. So these are assets that the central bank has, typically currencies, which they keep in their coffers in order to facilitate trade. So when traders in their own country want to trade, they need to have access to a currency with which to pay and receive payment. And again, as I said in my first point, most of it is done in dollars. So you can see that central banks have got a lot of these reserves in dollars in order to be able to facilitate trade for their own national citizens who want to trade, right? Now, and then when it comes to numbers, about 50% of all a little bit more than 50%, 56, 55%, of all reserves that are being held in national central banks are dollar reserves. Then after that, you have about 20% in euros, and then the rest is in the rest. Yeah, primarily G7 currencies, of course, you know, the pound, the Swiss franc, the Japanese yen, but that pretty much is it. So you're not going to have other currencies in the coffers of the national central banks. So you can see that the dependence on the dollar is huge. And the question is why? Why is it that we need to depend so much on the dollar? And I think the most obvious answer to that is there are huge network effects, right? Acceptability. So if you have two random countries, let's say Chile and India, want to trade, they want to encourage trade, they do not necessarily accept each other's currency as a way of trade, but they can still access trade by going through an internationally accepted currency. And the dollar, since the supremacy of the economy, is the one that plays that role. Yeah. So there is an element of network effects that is very difficult to change. And that is problem number one in the context of a change in financial system. The fact that we have this very well functioning system with a very big network effect is very difficult to change. But there is one more thing that I think is important here, and why is it that countries like the dollar beyond this network effect? Of course, you could argue you could have network effects with some other currencies, and in the past we had other currencies that played that role. In the time of the British Empire, it was the pound. Before that, it was gold. So the strength of an economy and supremacy at the global level is the one that typically, has a first mover advantage in determining and therefore capturing the market of network effects. Yeah, we see this very much in the digital economy. Similar effects with the Googles of this world being the supremacy in search engines. These are markets where network effects matter, and they play an important role. But there's two other reasons why I think the dollar has an important role to play, and after that the euro, and after that smaller currencies, and then it stops. And that is the following. First of all, the dollar is a good currency. Meaning that it is a stable currency and it represents value. And that is a reflection of the economy it represents. The stronger the economy, in terms of wealth, in terms of stability, the stronger the contender in terms of capturing the network effects market. So it's a good currency, effectively. Yeah, you could say the same thing for the euro. And the euro is the second global currency, but it is second in the game. And in the markets where networks matter, being the first matters. So it's a good currency, a strong economy behind it that backs it up. The second reason why we like the dollar and why the dollar has the supremacy has to do with the settlement system. And this is very important. And this settlement system is an infrastructure. It's an infrastructure that allows for the legality of transactions. If two people transact in euro, it doesn't matter where, within the Eurozone or anywhere else, it needs to be settled by the settlement infrastructure of the ECB called Target 2. If you transact in dollars, then any transaction will have to be settled via the infrastructure that is provided by the US authorities in New York. Yeah. So the settlement infrastructure is absolutely crucial. Other countries do not have that infrastructure. Think of it as bridges. They do not have bridges to connect settlement across the different countries. And therefore, when India and Chile transact with each other, they price in dollars, possibly, but they also settle in dollars because the infrastructure is there. So if they wanted to follow another way of settling, there wouldn't be an easy contender to find that will provide that infrastructure. So till we solve that problem of alternative settlement infrastructures, it is very difficult to bypass the big currencies that actually have that settlement infrastructure.
Yeah. Wonderful, Maria, because this is the perfect kind of way to get to the next question, which is exactly about how the infrastructure is changing and how this is happening amidst kind of geopolitical turbulences, as we were saying before. I think one of the points that, Nicola, you make in the book again and again is like how much, for example, in countries of the global south, cross-border payments are a huge problem. This is something which really struck me. So is this kind of technological change somehow paving the way for a digitalization of the current system, which may also somehow impact like the existing dynamics and kind of balance of power? And within this context, what may be the role of the so-called central bank digital currencies that I mentioned before, and of which, as you write, like President Donald Trump doesn't seem to be particularly fond of?
No, thank you, Leo. And I think what Maria was mentioning is a great bridge to actually explain what I call the interlink between three forces, which I think can play a role in shaping transformation in the international monetary system. So geopolitical tension, economic dislocation, and technology. Indeed, the US dollar is by far the dominant global currency for the reason that Maria mentioned. And again, we have seen attempts to try to erode this role, and all these attempts have failed. If you recall, when the euro was launched, there were some articles, arguing that the euro would be able to compete with US dollar. Before the crisis in Japan, they said the yen could have been an alternative to the US dollar. On the other hand, as Maria mentioned, in history, we have seen that a dominant currency can lose momentum and can be replaced also in view of a change in the global order. So what I try to describe in the book is that the world economy has changed, has dramatically changed. Because if we see, for example, in 2090, the G7 GDP was almost 50% of the global GDP. Now, in 2024, this percentage dropped to 19%. So the world economy in which we are living now is very different. And there's been also a recalibration, a reconfiguration, for example, of trade links. However, there has not been such a reconfiguration in the currency, let's say, in the currency hierarchy. The US dollar has been always in the past years, since the past 50 years, since the interwar period, the dominant currency. We have seen some erosion in some of the function, but very marginal. So even though the world economy has changed, the US dollar has been the dominant currency. So why geopolitical tension can play a role? Look, a few months ago, The Economist published an interesting article where they mentioned that the 25 non-aligned countries, so basically countries which are not taking a position in the Russian invasion in Ukraine, will not take a standing in a possible conflict between the US and China, have today represent almost 18 of the global GDP, and in the 90s were representing only 11% of GDP. If you think about that 18% of the global GDP is higher than the European Union GDP, you can understand how the geopolitical balance between countries has changed. And we have seen this in many different dimensions. And I'm not gonna steal Natalie's job in analyzing, how regional powers are also kind of trying to find their autonomy from the US foreign policy, starting from, for example, Saudi Arabia or also Turkey. But we are observing that in foreign policy, there is less and less, let's say, less and less capacity of the US to impose their unilateral vision. Therefore, I think that the different elements of economic dislocation, so a way for countries that now are more important for the global economy, and the geopolitical tension, which is showing a multipolarization of the global scene, can play a role for many countries to have an ambition to diversify from the US dollar. Now, going back to what Maria was mentioning, everything is beautiful, right? Everything seems that the elements are there to push for a diversification. What is missing? The most important part. You need to have currencies as well as underlying infrastructure that can compete with the US dollar. And so far, at the moment, there are no currencies that can compete with the US dollar. There are no infrastructure that can compete with the US dollar. We have seen, for example, Russia and China try to develop their national payment system. We have seen China trying to develop an alternative to Visa and MasterCard. But these are very niche in comparison to the markets that the US-led infrastructure has. However, here there is an element that can play a key role. And I go to the central bank digital currency dimension. What is a CBDC? I'm not going to go into the details, but just to send a key and simple message, a CBDC is a sort of virtual cash. So basically, is a digital form of cash where basically us as customer can access through any wallet. So for us as a customer, a CBDC would not imply any difference in comparison to use Google Pay or Apple Pay. It's a matter of a liability. So basically, a CBDC is a liability issued by the central bank. While anytime we are using a credit card or a debit card, we are using an electronic liability issued by commercial banks. So basically, it seems a very small difference, but it's a huge difference. But for the discussion about the international dimension of CBDC, potentially in Dreamland, an interoperable national system of CBDC could potentially create new bridges. And I like the word bridge because, actually, the Chinese authority, together with other countries, launched an experiment called multi-bridge CBDC, which basically was an experiment to try to connect different national projects of CBDC for cross-border purpose. And after the publication of the document that I mentioned earlier, that was published a few weeks ago by the Russian chairmanship of the BRICS, where they actually mentioned that bridge could become an alternative to the current system, the BIS, the Bank for International Settlement, that was part of the experiment, actually called itself out from the project. So we see that there is actually a politicization of the topic of CBDC. And just to conclude my very short remark, I would like to connect with your very relevant comment on the Trump presidency. As you know, the ECB, so the European Union, is working quite intensively on the digital euro project. And we have seen that in the US, the atmosphere is completely different. Even under the Biden presidency, there was a lot of skepticism for a potential digital dollar project. And during the campaign, Donald Trump actually argued that the digital dollar project might have been a tool to foster surveillance for US citizens. So basically, we expect, but we know that Trump is very volatile in his idea, we expect the US to not implement any even exploratory experiment into digital dollar. And it would leave the floor for other countries like China, who is leading the experimentation on the US dollar, on the CBDC systems, to actually have a lead and potentially also propose and promote standards for also other countries.
Yeah, thanks, Nicole. I think you call it the innovator dilemma in the book, like the situation that's the US is facing now. And instead, with Maria, I would like to hear to know more about these other projects and what's like the strategic ambitions behind them are. And I'm thinking especially about what Nicola was mentioning, so the Chinese kind of digital currency, so the ECNY, which was launched in 2016, and the digital euro project. So what kind of are the potential strategic implications of these central bank digital currencies? Do they have the potential to actually somehow, I'm not saying disrupt, but at least somehow change the current system? Or do you think that's not the case?
Yeah, so Nicola, thank you. You've given us a sort of a tour de force, actually, of all the issues that we talk about. Maybe I pick on a couple of things just to give you my take on these things and come to the answer of this, the geostrategic relevance of all of this. Let me go back and give you a little anecdote, because I think it's just important so that you understand that the significance of all of these payment structures. In March of 2022, when the Russians invaded Ukraine and the G7 countries imposed sanctions on Russia, the European Union left Gazprombank unsanctioned. And the reason why the European Union did that is so that we could continue to buy gas and oil from Russia and be able to fulfill the contract. We paid the contract. We had a contract primarily in euros, and we paid this money into Gazprombank, which we wouldn't have been able to do as Europe if Gazprombank was sanctioned. Yeah, so we left Gazprombank unsanctioned. We paid the money in, fulfilled the contracts, but there was one little thing that became clear only afterwards, and that is that although the European Union fulfilled its obligations in terms of its contractual obligations, and therefore could receive gas and petrol, Putin and the Russian authorities had no access to these euros. And they didn't have access to these euros because, like I said, euros need to be settled. Any transaction on euros need to be settled by the ECB, and the ECB is unable to settle when one side of the settlement transaction is under sanctions, namely the Russian authorities. So that left a huge amount of euros in the Gazprombank that the Russian authorities could not access. And this is why President Putin demanded that very, very quickly, actually, that the European Union buyers paid him in rubles. Yeah, that was the reason behind that justified that. And of course, the European Union buyers bought rubles in the markets, in the open markets, and then created an account in Gazprombank a ruble account where they transferred from the euros to rubles. It could be settled because the two sides of the settlement transaction were Europeans, and therefore the whole thing could be pursued. This is crucial because sanctions, to the extent that we're talking about geopolitical tensions and directions of travel, sanctions exacerbate those trends. So when we sanction something, we are feeding into a long-run trend, which is a bifurcation of the international financial system. I think this is crucial because in Europe, we tend to think that this is happening to us. It's not just happening to us, it is happening to us, but we also contribute to it. And that is important. There are good reasons why we do that, but it's important to understand that this is, we are now on a downward spiral of bifurcating the international financial system. And it comes down to this infrastructure. On the digital euro, there are, and the CBDCs, there central bank digital currencies have two functions, a retail function, and the digital euro conversation that we've heard till now is about the retail side. You and I opening a digital euro account means that we have digital cash. So a transaction done in digital euros is different than a transaction done digitally in euros, in the form that digital cash is guaranteed by the central bank, whereas any transaction that we do now with our bank card is not fully guaranteed, is guaranteed up to 100,000. That is basically the main difference. But when it comes to geopolitics, the relevance of retail CBDCs is not so interesting. What happened, at least for the moment, what is interesting is the wholesale, the cross-border transactions, which is effectively what I started with, trade and financial flows globally, and how big banks transact with each other. And what the wholesale CBDC offers is that alternative infrastructure for settlement. Yeah, and Nicola talked about the mBridges project. I use the metaphor bridges because I wanted to lead into the conversation of the mBridges. This is effectively allowing, is an infrastructure that when in operation and if in operation, will actually allow for two countries to settle between them. Let's say Chile and India in my example, earlier example, provided, of course, there is an agreement on what currency they're doing this. Yeah. For the moment, Chile and India, as an example, don't necessarily accept each other's currencies. A very good example of this recent is Russia and India, where India did not want to pay in rupees, buying energy from Russia, because they just don't want any, they didn't want to pay in rubles because they just don't want any rubles. They want other currencies that they could use for international trade. But that is on the use of the currency. On the settlement, the CBDCs actually do provide that infrastructure. And I come now to the latest event that Nicola talked about, which is the BIS leaving the mBridges. mBridges was a pilot test of cross-border payments in which 4 or 5 central banks, global central banks were participating, Hong Kong, China, Saudi Arabia, and Thailand. And the whole thing was managed by the BIS. The BIS is the central bank of the central banks. And that was a pilot project actually to try and identify the benefits of this. And there are huge benefits in time and costs. So this is a project that actually, if and when it comes to operation, it will be actually quite beneficial. Yeah. The biggest problem about any of these activities and projects is governance. Who will govern this? Under which law and, if you like, legal structure will this operate? And the fact that the BIS was participating in that was providing at least hope that we had a global legal framework under which we could operate. The departure of the BIS from this project eliminates that, and in my view, is very troubling. Yeah, there is a project that is actually almost in operation, it's almost ready to go. It's not there yet, but it's almost ready to go. But now hasn't got an anchor that is settled in the global, let me call it Western. I don't like the term, but let me call it the Western system in which we can monitor and control. So now the project itself, the mBridges project, is gone in a direction that we no longer monitor, and therefore we cannot influence. And of course, the motivation for this is very much what Nicola said during the BRICS meeting. There was very much a discussion about, why do we need the dollar for all of this? Can we not use mBridges at least for settlements? Yeah, and some of it is understandable. 50% of global GDP is now trade in Asia. It's not obvious why 50% of GDP that takes place in Asia actually needs to settle in dollars, right? I mean, it's not an unreasonable question in my view. However, it means that the global currencies like the dollar and the euro will have a lot to lose, and we need to decide what we think about that. Yeah. And by DIS departing from this, we are losing at least insight of what is going on, in particular because there is a parallel project which has got Western central banks in it. The Central Bank of France is in there. And of course, it's as though we are developing a parallel system to this, which comes back to what I said originally, that the system, the international global financial system, will bifurcate. There will be what we call a dollar-based system, and then another base system, which we don't know what will be based on. It cannot be the Chinese yuan, digital or otherwise, because the yen is not traded. Sorry, not the yen, the yuan, the Chinese currency is not traded. This is not a currency that you could buy in the markets. It's only domestically used. And therefore, till the Chinese authorities change that by law and allow the currency to trade globally, they don't really have a proper contender for replacing that system. But in terms of settlement infrastructures, the CBDCs, I think, in my view, are coming, and they're coming faster than we think, primarily because through sanctions, we are accelerating that process. Russia is looking for a settlement system, and China will be providing one. And that, I think, is something that we need to bring in the policy debate, and we need to understand what we make of it. How much do we worry about that? How much we don't worry about that? And what would it actually mean for the international role of the dollar and the euro in our own continent?
Yeah, thank you, Maria. And exactly my final question to both of you is about what the future scenarios may be. I think you started outlining them, Maria, but I think in the book, Nicola, you mentioned 4 possible kind of directions. One is like the rise of a new hegemonic currency, or the rise of a global digital currencies as an alternative, or just fragmentation and a multipolar international monetary system, which perhaps is close to what Maria was saying before, and then it's all changed to stay the same. And together with this, I would like also to raise 2 questions which actually fit very well together, which were raised by the audience, namely by Francesco Iovine and Franco Passacantando, which are about euro. So Francesco Iovine notes that given the variables that we discussed at the beginning, can we imagine that like the euro is going to lose relevance globally? And how could this be addressed? And Franco Passacantando instead underlines that, yeah, on CBDC, Europe is more advanced than the US. So could this something that could be somehow leveraged in the future to revive the role of the euro at the international level? So what do you think, Nicola? Where are we heading to?
No, thank you very much, Leo, and for the question. Just a very quick message and concept about the digital euro. So I think there was, and if you see the presentation and the communication from DCB on the digital euro project, there's been quite a turning point. Because at the beginning, it was more about, improving the efficiency of the system, looking for fostering innovation in the European Union market. But in the end, since the war in Ukraine, if you see the presentation and the communication of the CB are underlining a key message. And there are 2 keywords: pan-European and strategic autonomy. So the European Union today lacks a pan-European settlement and payment system. If you take your credit card, for example, or your debit card, right, you will see that there might be Bancomat as a circuit for payments, but it's always co-badged with MasterCard and Visa, because our European system are not interoperable. What does it mean? It means that if I go with my card to France, for example, to pay, the settlement and payment system that is used is not Bancomat, which is a national system, but it's Visa or MasterCard. And this was seen by the first von der Leyen Commission as a key vulnerability of the system. If you recall, for example, in 2007, the US, in 2017, sorry, not 7, the US actually implemented the unilateral sanction against Iran. And the European Union didn't want to comply with the sanction, but because of the role of the US dollar and this infrastructure, it was impossible for European firms to actually trade with Iran. Therefore, the digital euro, in my point of view, is also a political project to try to strengthen the strategic autonomy of the European Union. And this connects also to the four scenarios that I envision in my book. And of course, some of them are more unlikely than others, of course. So the first one is a new hegemonic currency. So basically a national currency that can be the euro, could be the yuan, that replace the US dollar. This is I would say, mission impossible type of scenario, because the European Union lacks specific factors that drive its international status. First of all, common capital markets, a common foreign policy, which are all factors that actually influence the international status of a currency. And as Maria mentioned, also for the Chinese yuan, they lack the macroeconomic institutional factors that drive an international currency. The second very unlucky scenario is a global digital currency. So the creation of a new system. There was an op-ed published by the former BIS director Carstensen, in which he was envisioning a system where the IMF could create a synthetic currency that would become the truly global currency. Again, this would imply trust among countries, high international cooperation to establish a common legal and standard framework, which is, again, make it a mission impossible scenario. There are two scenarios that for me could be, and I don't like to predict the future, but I think there are the two scenarios that I see as the most likely. The first one is fragmentation towards a new multipolar international monetary system. We actually recall what Maria was mentioning. Basically, we don't have any empirical evidence so far suggesting that we are seeing a diversification from the US dollar. What we are observing as analysts are small-scale attempts to try to find niche where countries can diversify from the US dollar. And I think in the next years, we're going to see more and more attempts to go in this direction. And finally, it's all changed to stay the same. So this is also a scenario which is also likely, because the US still have the macroeconomic, institutional, and geopolitical factors to maintain their dominant role. However, as Maria was mentioning as well, I think if the US will still be so skeptical about the digital dollar project, they will not bring any new energy in trying also to shape the current international discussion around CBDC. They might risk to lose their lead in the international monetary system.
Thank you. And then over to Maria for some final thoughts.
Okay, well, maybe just a couple of things on the digital euro and then on the dollar. So on the retail side, which the discussion of the digital euro, when you hear the word digital euro, it is about the retail side. Right? So it's about whether we should open an account. And in my view, the ECB had not been very successful in providing us with good justification why we need it. Yeah. But actually, circumstances caught up. That's my view. And the issue of economic security has now turned the argument to its head. And actually justifies, in my view, the pursuit of the project, irrespective of whether you and I open an account on digital euros. I think the ability to have it as a payment system for the euro area is something that we need to be kind of clear about. And indeed, as Nicola described in his comments, 70% of all the payments that are done in the eurozone are done through payment providers, namely MasterCard and Visa, that are not European, and Apple Pay and Google Pay, right? 70%. If you care about economic security, you care about two things. You diversify. So 70% is a highly concentrated number, irrespective of where this is concentrated. I don't believe that the US firms are particularly problematic in that respect. But if you care about economic security, then concentration is not a good thing. So you need to diversify. So that's one thing. And the other thing is you need to rely on your own 2 feet. That's what economic security means. You need to rely on what you can provide. And the digital euro is a way of providing a platform for then private firms to come in and pick it up, because there is no reason why the taxpayer should be paying for payment services. These are typically done by private firms, just like MasterCard, just like Visa. So private firms need to do this, including in the digital era, Apple or Google Pay. But we don't have European firms that do that. The digital euro will provide, and this is very much what the ECB is telling us, it will provide a platform for innovation to thrive. And that, of course, is a promise, but and we need to see it in reality. But in any case, I think it's a good motivation for us to pursue that. But that's not so much the geopolitical thing, which is a little bit different. The geopolitical thing is how do we interact with the rest of the world? And here comes also the question of the euro and the supremacy of the euro. The supremacy of the euro will be established only when the euro has the features that will make it a supreme currency. The digital provision of this is playing at the margins. The euro will become a truly global currency when we have the economy for it. And for the moment, we don't have a common asset. Therefore, the economy, as a promise to back up the euro, doesn't have the characteristics to become internationally relevant, in my view, beyond what we have. Yeah, and this is what the markets tell us all the time: 70% dollars, 20% euros. That's it. Unless the euro area becomes something bigger than what it is today, I don't believe that the digital provision of the currency will make any difference. But again, I come back then to the supremacy of currencies. I mean, the dollar will continue, in my view, for some time to be the global leader, simply because there's no alternative. I think that's basically the bottom line of it. Till we have a credible alternative for this, then the dollar will continue to be that. But, and I come back to my argument on sanctions, we forget that sanctions will force countries to go in a different direction and find second-best solutions in order to be able to still trade. So if countries in Asia are under sanctions, then they don't have access to euros and they don't have access to dollars, and therefore they will find alternatives, even if they are second best, meaning they're not efficient, they're not so popular, but they will find solutions. Just like Russia now has alternatives to continue trade. Say, think about the energy that it sells into Asia. It gets paid for it. How does it get paid for it, and how is it settled? Well, that is the direction of travel. And CBDCs here can actually act as an accelerator of this process.
Thank you, Maria. We are perfect on time. I can see that obviously this, as you said, this was a bit of a tour de force, and there are lots of questions that this whole discussion has raised, and I hope there will be other opportunities to discuss them. And I think, anyways, Nicola's book provides a very good starting point to reflect on this. But to conclude, I will just give the floor to Piercarlo Padoan, who, as I mentioned, is the chairman of the board of directors of UniCredit and vice president of YAI as well, for some final thoughts.
Well, first of all, it was a very rich discussion, and I thank all participants. But this is clearly a demonstration that the book by Nicola is extremely fascinating and interesting. Indeed, if you think of the very large amount of research and discussion that has been brought about since the world of geopolitics came up, it is still mostly about trade. There's very little about finance and the interlink between finance and economics and politics, which has been, on the other hand, we all recall, the leitmotif of the international relations. If you think of the history of international relations, you always have had some kind of interaction between economics, finance, trade, and politics and security, including, for instance, in the Bretton Woods system, where security dimension provided nuclear protection to the so-called Western countries at the time of the Cold War. So it's always been like that, to have this twin discussion going on, although with different emphasis. So this is my first point. Second point, of course, the discussion should be well placed in where we stand today, and it's difficult to define it, although I would choose a word which is often used: fragmentation. Fragmentation across very many domains evokes the fact that there is a lack of global governance. So maybe you can turn around the point and say, how do we deal with fragmentation, and therefore provide institutions that can minimize the damage and maximize the benefits of defragmentation? One thing is sure, we cannot go back to the past. And we cannot imagine a world system which is the same as or similar to Bretton Woods. It's a totally different story, and the scenarios at the end of the book give some hints about that. Third point, fragmentation is not a static situation. It evolves very rapidly, and it's driven by three forces which the book highlights. Financial issues, including network externalities, which Maria described so well, security, and technology. Now, these three things can interact in a number of ways, which is not easy to predict ex ante, but certainly they have to be taken into account simultaneously, excuse me, if we want to get some hard results. And final point, Europe. Maria again was very clear in stating and putting it on the table. The digital, what is the digital Europe? I have been in many seminars where after a very technical, sophisticated discussion about how this digital euro will work, someone will raise his hand or her hand saying, why do we need one? And I have never heard a very convincing answer with the exception of one. We need one for security reasons, not for economic reasons. I may be stretching the point a bit too much, but let me use it this way. So we are facing a very exciting, so to speak, a new and global environment, which can be understood with the tools of the past, so to speak, but which also bears new elements, which are the fantastic role of technology, which is extremely complicated, but which can be used in several different things, and the fact that the relationship between economy and security is much more pronounced than it was in the past. Let's not forget one element which we tend to overlook, that much of the global trade can be explained by political affinity rather than by economics as comparative advantage. This may sound as a paradox, but maybe it's not a paradox. And I invite all of you to read the paper, the book. It looks like a big paper. It's a big paper or a small book, you decide. Anyways, it's a very pleasant reading. Because this may spark off very many interesting discussions, and I thank the IE for bringing this to the fore. Thank you very much.
Thank you to all our distinguished speakers. This is the book, by the way. You can see a hard copy. Obviously, it's available online as well, but if you want to have a hard copy, yeah, it's not that big, as Professor Padoan was saying, but there are a lot of ideas and food for thought there. So I would like to thank everyone, really, and please be in touch. We have other books in this series upcoming early next year, so we will have other presentations, other opportunities for discussion. So stay tuned on YAI channels for more of these. Thank you.